Hey guys, RC Peck here. And I want to show you a handful of charts. I'm just looking over on my pad of paper here, probably about 10 charts. And looking at charts is not the answer, it is a tool. Understanding how to look at a powerfully simple chart is can form a filter and help you. What I want to do is just counter the narrative out there right now. I was on a coaching call today and I heard from one of my training clients that and then the exact words were something like, or near the exact words, like, these are unprecedented times. There's so much turmoil. Um, and what I heard in my brain was, it's different this time. Like it's not like last time, whatever last time was, last week, last month, last year, last election, last decade. Um, and this is not to minimize the feelings of this person, but in the 22 years that I've been training people, which if you do the math, that's 1998. People have always come to me with the, oh my gosh, it's different this time. 1999, the clocks, the computers not being able to handle 2000, too much money getting printed. Um, and to me, it's the narrative is always different, but the output is always the same. I'm very scared to do anything. So I want to counter that narrative by showing some simple price charts. And I'm going to show two different types of price charts. One, I'm going to show sectors of the United States, not all of them, just some of them. And then I'm going to show other parts of the world. And between those two, I want to talk about beliefs, one of the beliefs we have. Because if you don't update your beliefs, nothing I show you, nothing you do, nothing you read, nothing you pay for will change. So the first price chart I have here is the transportation average. And though it's not at new lifetime highs, let's just kind of point out that it is coming up here and testing a very important area, an area that if you want the market to go higher, this is where you want the transportation average. You want the transportation average to be coming up here and testing new highs. And the only reason why it would be testing new highs is because there's a lot of internal strength, whether we believe it or not. So that's the transportation average. Now, I'm using a tracking symbol, IYT, but that's the transportation average. Next, just let's go look at materials. I rarely talk about this sector of the stock market, and what you see here are new lifetime highs. Now, the price charts I'm showing you right now all include dividends reinvested. And so what you see here is just a beautiful breakout. If you look in the super upper right corner, you see a breakout right there. And then you see a retest. It breaks out and then it retests. What was a ceiling is now a floor. And that is just beautiful. And that's materials making new lifetime highs. So the next one I'll show you is then industrials. Dow theory talks about transports and industrials both making highs together. If one doesn't and the other one breaks down, that's a sign that something's wrong. So here's the industrial sector. Using the same resistance here that I did with transports, you can see that industrial sector also is breaking out, not at lifetime highs yet, but still, this is a sign of strength. This is not a sign of weakness. When a price breaks through a major resistance, that is absolutely a sign of strength. Then I will show, this is consumer staples. It had quite the correction with the market itself, and it didn't fall as far as the stock market. The stock market, as measured by the S&P, fell 34%. Staples only fell 24.5%. So nicely done, Staples. And what do we have up here? But we have new lifetime highs on Staples. Now, some would say, CRC Staples, that's a defense. But I think people really need to question what they consider defense anymore, because a lot of the defensive parts of the market have really underwhelmed and had much more price volatility, price violence during the most recent correction. And so this is one of the things about understanding how to read price charts and how to use it as a filter, because what you don't want to be doing is following a narrative from 10 years or 20 years ago. So that's Staples right there. Let's counter this with, let's counter this right here with Discretionary. But here's discretionary. So we both have staples and discretionary making new lifetime highs. And again, a new lifetime high is a sign of strength and not a sign of weakness. Now, again, these price charts are going up against the news that's getting pumped into your brain, the fear, the anxiety, the stress, the worry, the horrible sleep that's literally getting pumped into your body. Um, and these price charts are telling you something else. I'm not even going to show you technology today because it is just screaming higher. But what I will show you is healthcare, and healthcare is at a new lifetime high, too. Guys, we don't need all sectors making new lifetime highs. The energy sector is about 2.6% of the stock market. That thing could go away. Every stock in there could go to zero, and it would not make a difference from the average point of view. Um, and financials are also doing horrible. And yet, I think, what are financials anymore? Everything seems to be free at a bank. They seem to have real estate, empty buildings. So I don't think it matters that much anymore what financials are doing. But here are 6 sectors I just showed you that are strengthening, have either broken above major resistance, and or are at new lifetime highs. So the belief I want to share with you today, and if you don't shift your beliefs, and it's not something you can just say, oh, I have a new belief. It comes through training and rewiring, something that I do in my training. But let me just read this to you. I don't have the time, or I don't have any more time to spend on this being investing. I'm already spending nights and weekends reading newsletters, looking at research, learning strategies. Plus, I'm married, have kids, a job, I commute. Maybe you don't have a commute right now, but you know what I mean? You're full. And then I still have to sleep, work out, eat, maybe even hang out with friends, call siblings, call parents. If I did have more time, it would be different, but I just don't. So that's a belief that people have, that they just don't have the time because they need more time, right? People often believe they need more time for better results, for great growth and income, but actually that's not true. And if you just notice how powerfully simple approaches take very little time, buying the right investment takes no more time, actually takes a lot less time buying the right investment than buying a lot of wrong investments. Holding the right investment for the right amount of time takes no time. Getting in and out and trading and selling call options and doing iron condors and backflips and dojis on trends takes a lot of time, right? People often believe better results take better time, right? People often believe that effort matters. Money doesn't care about effort. There's a minimum amount of effort needed, and anything over that minimum amount of effort, you just start diminishing and hurting and crushing your returns. And so, if one doesn't recognize that maybe this is just a belief, meaning it's not necessarily true, I'm actually not going to do belief number 3 today. If people don't recognize, wait a second, that's not something everyone believes. Some people don't have this belief, but this is a shift, right? Meaning, this is a belief that if you don't think it can be shifted, it doesn't matter what you do. Now, if you see this now more as like, okay, I'm open. Maybe I don't need more time. Maybe I just need to be aligning my money, knowing how to filter out information. And so I want to start bringing you more of the mindset of the game, because it's not enough to just show you some price charts and to provide commentary. That's not enough. Okay. Now, what I want to do now is leave the United States. The first 6 symbols I showed you were all slices and dices and segments and tranches. Tranche is actually not the right word. Slices of the U.S. stock market. So let's jump over to the 3rd largest economy on the planet. This is now what I'm going to show you. These are all indexes, so they do not include dividends. So if we did include dividends, they'd be looking better. But here you have the Nikkei, the Japanese stock market. Now, this is a major resistance. This is about a 28-year resistance, meaning the market's been trying to get above this for 28 years. Notice how close it is. Even though a 28-year resistance is not a lifetime high, guys, this is a sign of strength. And I'm just curious how badly the Nikkei fell during this last correction. 31% didn't fall as bad as the US stock market. So this is a sign of strength in Japan. They know about elections in the US. They don't seem necessarily to be that bothered. The point of me showing you doing a little tour around the world is this is not a US thing. Yeah, there might be elections coming up, but notice this here. This is India. Now, India, from an economic point of view, I'm guessing is the sixth largest economy on the planet. I'm pretty close. Um, even if it's not the sixth, what do we got? US one, China two, Japan three, Germany four. What's five? France, UK. India's pretty close in there, 6, 7. So here is India going up, wanting to get up here, wanting to break higher. This again is an index. This is a sign of strength. I am curious how far this fell in the COVID crash. 30, yeah, 38%. So fell worse than the US. But again, recovered, moving higher does not include dividends. If it did, it would look better. And it's coming up here to test new. And I don't even know if these are new lifetime highs. Let me just zoom out quickly and just see what we have here. Guys, that looks like new lifetime highs. So, yet there's another country testing new lifetime highs. That's a sign of strength. Okay, I've got two more. I got the German stock market right here. Very similar. Do you notice a similarity among all these countries around the world? They're all coming up against major resistance. Again, let me zoom out a little bit just to see what's going on in Germany. So here we have some lifetime high action right here. Germany's bumping up against that resistance again. To test that resistance, that's a sign of strength, not a sign of weakness. If Germany was down here, that would be very different, but they're not. So as we tour the world, we see more strength. Again, I'm showing you this because plug yourself into news, which I'm not even sure what news is anymore. It's probably more opinion. You have to find some sort of counterbalance system. Now, look, guys, this is a very ugly price chart. This is the Chinese stock market, the second largest economy on the planet. These are their A shares. This is the Shanghai Stock Exchange. I'll zoom out, but again, it is breaking above. Actually, I think it's this, and I'll zoom out, but it has broken above resistance. The thing is, and the question is, can it stay above resistance? As you can see over to the left of the price chart right here, it failed and it broke down. Let me do a big zoom out. I don't know how big zoom out, 10. We'll go with 10 years. And so this is the resistance here. And the reason I like this line better is because if you go all the way over to the left of the chart over here, you can see that it was a resistance then. And China definitely wants to stay. I was going to say get above. They've already gotten above it. And now they want to stay above it. And you can see they haven't been able to stay above it in the past. Yeah, they had the ginormous spike in 14, 15. But now they're above it. And again, that's a sign of strength. That's the second largest economy. Germany is the fourth largest. I showed you Japan, the third largest. And I will end with an index shot of the US stock market. And I'm going to go back to the normal time range I look at. And again, we've got new lifetime highs or bumping up against. This is an index, does not include dividends. So it's going to be slightly underperforming from an S&P 500 total returns, which means include dividends. So again, bumping up against lifetime highs. So as we tour the world, we have the world saying we have more strength. We're finding our strength. Whether those central banks or those of those, I said companies in my brain, they are companies. India is a company. The U.S. is a company. China is a company. Sure, central banks of those countries are going to do what they can to help them. And so when we tour the globe, what I see and what Price sees is strength. Now, I don't know what's going to happen in the election. I don't know who's going to get elected. If the 2016 vote was anything, it was expect surprises, including the stock market going higher after Trump got elected. So, practicing not having an opinion, practicing being detached is a way to grow your money better. So, guys, please go ahead and like and subscribe if you haven't, because it helps. And let me know. I read every comment. Let me know what comments or concerns or questions you have so I understand more about what I can look at and what you guys are thinking about. And hey, if you find yourself enjoying these videos and wanting more and noticing that another newsletter or another research service or another big box advisor is probably not going to do it, then you may want to check out my 2K for 10K training. And it's pretty special. It's a way to get the exact same training that my one-on-one clients used to get when I did one-on-one training for $25,000. It's super powerful. It gets right to the core, and it's something that literally can in days rewire your brain to help you get and start helping you start get the growth and the income that you want, because it's really about getting the control back over your money. So thanks guys for being here again. This is RC Peck and this is Fearless Wealth, and I will see you guys on the next video. Okay, bye.